So there is a more trust issue because after this cases, more issue will not come. That is also not likely. So I think investors should try to exit on any level time for time being, and after that, any balance sheet clear, they should try to re-enter on lower level. I think this is the concern are too much concern which we are seeing on management level commentary, which we have seen NPA spikes on gross NPA, net NPA, both spike. So this is the time major concern in banking sector as well. How these things can be run over a longer term period. So it's a biggest. I think it's a
Right.
big issue in banking.
Mahesh, I'm afraid we'll have to pause you over there because we're cutting in right into the IndusInd Bank con call. Something important coming up. Let's watch.
One, how do we get comfort around whether this one-offs are more, is this the last kind of set of one-offs in terms of cleanup, or there are going to be more? And my second question would be regarding the liabilities. In last couple of months since closing the year, how much of deposits has the bank lost? And how do we think about the liability strategy of the bank over the next, let's say, 6 months? Thank you.
So if I can come in at the first part that you asked about. So as Chairman mentioned earlier, the financial impacts of all the irregularities brought to the board's and the bank's attention has been taken into the account while we have prepared and disclosed these results. There are nothing that is outstanding today to our understanding. So one-off as such, we have already taken for. Whatever is the business as usual impact as we progress, the near-term impact because of whatever liquidity, etc. we carry, that is part and parcel of the, BAU. There is nothing one-off per se. There could be some, industry or business-related issues that will happen, which is part and parcel of being in this business. But from the financials perspective, there is nothing that has not been accounted for in the numbers that we have. And as we mentioned in the opening remarks, we have done a thorough check of all the accounts that we have. We have spent extra time. You have seen that we are almost late by a month to announce the results. So a lot of efforts by all the stakeholders involved has gone into ensuring that the financials reflect the fair and transparent position the bank has. Coming to the deposit side, as you know, we don't disclose within the quarter our deposit base. We have given you how our liquidity position has been. In the first half of the quarter, the liquidity that we have, the LCR is 139%, which is well above the regulatory threshold as well as higher than what we had carried last quarter. In terms of strategy, I will hand over to Shaumitro to give his comments.
Hi. See, reliability, especially the utilization, has always been a core, thing which we have been talking about. Apart from the home markets, developed markets, which we do, the new ones which we are talking about, that one bank approach, where all the the BUs are now getting into the liability sourcing, and we have different contests and incentives to run for that. Second is that what we are doing is that the premiumization of the accounts, the branch distribution is now looking at opening the high value accounts, and that's actually scaling up quite well. So you will see that growth happening in the affluent side of the business. And the cross-sell, and especially the NOS, which we look at, the number of sales per person, and that's we are seeing that with the one bank approach, that's actually climbing up quite well. So I feel with at least on the granular, and you've seen our retail deposits going up the percentage from 44.1 to 45.1, and even during this particular quarter, we are seeing the retail growth is absolutely right on top. So I don't see that to slow down in any way.
So just before you hand off to your next question, let me just also reinforce the point that was made by Indrajit earlier about the whatever we have done to bring things to closure. So, there has been, after these issues were raised or identified, the bank has done an extensive review by both external and internal agencies for identification of all issues or any other issues that could be sort of identified. As you can imagine, the statutory auditors have also done a very extensive stress test, and obviously that they have fully put in their financial and their report whatever has been identified. And of course the financial impact, as already mentioned. The important aspect that I have to share with you is that during this process, wherever we recognize or figured or identified controlled weaknesses or any risk areas, those are absolutely being addressed. So I think we are using this opportunity from this crisis to do a very deep review of all aspects of systems, controls, procedures, and people, to we strengthen all to make sure that we have a very robust systems and processes in place, and with a high level of transparency as we move ahead, so that if there is any issues, they must be surfaced expeditiously so that the same can be addressed. And I'll stop here. Thank you.
Thank you.
Thank you. Next question is from the line of Adarsh from Enam Asset Management. Please go ahead.
Hello. Hi. Thanks for taking my question. Sir, you did mention about the sustainable or the clean margins and operating profit. Just want to understand historically.
Your audio is not clear.
Okay, just 1 second. Yeah, I hope this is better now. So I had a question on the clean operating profit you mentioned. Obviously, the cleaner margins have taken a dip, but the fee incomes have where we were earlier, right? So, and historically, kind of the banks had high income. So just wanted to understand how sustainable you think is the fee income streams, or as we de-risk the book, does this fee income kind of take a knock?
So Adarsh, as you would see, some part of the net interest income has got reclassified into the fee income. We have given that information in the disclosure as well. So because of that, the fee income is where it is. Going forward, as you know, the strategy which Chairman Soumitra, etc. covered, it's part and parcel of our business. Some of the areas that we are into are higher fee generating businesses. So it's a mix of what kind of loan mix that we aspire for, what kind of the segments that we are in. I'm sure the board and the management as well as the incoming CEO will have a say into how we want to progress. I think it will be a little bit premature to comment on what should be our fee income or the fee to asset ratio, etc. going forward. Let's see how the every quarter goes.
Okay, and the second question is, sir, how should one look like, since you've taken a full stock of the MFI NPAs, you've kind of provided a lot as well. Does this mean now that when you say we start on a clean state, our credit costs go back to what the normalized bank's credit costs were, or it's kind of still uncertain? We've taken a large part of it, but we are not sure of how credit costs would behave incrementally.
So overall, Adarsh, you would have seen even in this quarter, X of microfinance, our slippages, credit costs, etc. in other segment has been better or stable. So X of microfinance, we have not seen any issues as such, and those businesses continue to be in the steady state. The microfinance side, we have taken additional slippage this quarter. We have also given one additional disclosure. If you would have seen in microfinance segment, there is a 0-day plus book. We have given a trend, and that you would see that the 0-day plus book is almost coming back to normalcy where it was in the last year's March. So that gives us confidence that the incipient unrecognized stress is coming back to normalcy. But having said that, as you know, the situation in some of the states is still evolving. There are a few elections in the next 12 months. So we don't think the next year in microfinance will be back to normalcy. I think there should be a step down, obviously given the number that we have reported, but in which case there will be step down from the current quarter slippages, but it will still be elevated versus the business as usual. And then maybe in the second half of the year, you will see the things progressing back to normalcy. That's our base case today. But let's see how the MFIN guardrails, the industry election, some of the monsoon-related implications happen. So that's where we are. We are cautiously, looking at this business, but normalcy is maybe 6 months away.
Got it. That's useful. Thanks.
Thank you. Next question is from line of Ankit from Nomura. Please go ahead.
Good evening. So I have one question. So we had around about 30-25 crores of contingent provisions as of last quarter. Have we utilized those in this quarter?
Yeah, that has been utilized.
Okay, that's it from my side. Yeah. Thank you.
Thank you. Next question is from the line of Piran Engineer from CLSA. Please go ahead. Piran, may I request you to unmute your line and proceed with your question, please?
Rito, am I audible?
Yes.
Yeah, am I audible?
Yes, you are.
Yes, you're audible.
Taking my question, just on the 3,500 crore pitches.
We are losing your audio. Your voice is breaking. Can I request you to come back for a please?
I should be audible now.
Yes, you are.
Better.
Yeah. So the 3,100 crore slippages, just wanted to understand, did that slip in the quarter or had it slipped earlier but you've recorded it now because of some, recording lapse earlier or internal control lapse?
So we have given notes to account where we have given this background. There is around 1,800 crores of loans which were incorrectly classified into certain other categories, and that resulted into them being recognized in more than 90 days. Those classifications have been rectified in this quarter. There was a review going on which we have also disclosed. So the 1,800 crore is where the correct classification of the underlying customer base has resulted into them, and that correct classification, as you would know, happens from the initial day, and those original DPDs, etc., properly accounted for. Just that the classification back to 90 days resulted into additional slippage of 1,800 crore. The balance is business as usual slippage. It is also higher, we understand, and that's what we have been discussing throughout the year. The slippages accumulated or the overdue book accumulated over the 9 months has turned into NPA in this quarter. So that's those two segments, those two sub-segments are driving the microfinance slippage.
Got it. Okay, this is clear, Indrajit. And just secondly, what is the strategy now in this business? Like, given what all has happened, one is the environment and second is internal controls, accounting, etc. Is it fair to say that we continue to degrow this book?
So we, as Chairman Sir had mentioned earlier, that we will be cautious on microfinance segment. The approach of disbursements in the customers with long vintage, with better past payment record, those approaches will continue. The diversification into merchant advances continues. However, if you are expecting me to push pedal or change, change the disbursement approach towards, reducing than what it is supposed to be, I don't think so. Business as usual disbursements will continue, but we will not be overly either cautious or aggressive in this segment. Whatever is flowing through our credit filters, we will be willing to take it. But we are waiting and watching on how the underlying industry is evolving. As you know, the MFIN guardrails, the monsoon, as I don't want to repeat it again, we are watching all those events. And once, in which case, the leadership is established, then the board and the management will take a relook at the bank strategy, which segments we want to push, which we want to, stay a little bit cautious. You would have noticed our capital adequacy is still above 15%, so there is growth capital available to the bank. The management, the board will decide at appropriate time what should be our medium-term, long-term loan mix that we should aspire for.
Understood. Okay, this is clear. Thank you and wish you all the very best.
Thank you.
Thank you. Next question is from the line of Shubhradeep Mitra from Nippon India. Please go ahead.
Yeah, hi sir. Sir, I have two questions. The first one is that what led to the reduction of the corporate book from 1,70,000 to 1,40,000 during the quarter? And my second question is, if I look at your net interest income, even if I adjust for the one-offs, it comes to around 4,700 crore for the quarter against a normal run rate of approximately 5,300 crore. So what explains that difference?
So the other, business as usual is also impacted because of the normal interest reversals have happened because of the slippages during the quarter. So that has an impact. There is additional impact because of the events in March. We had to carry excess liquidity. That liquidity comes at a cost because you are deploying it in a lower yielding asset. Thirdly, the loan mix has become loan mix because of the MFI being written off. The yield on the book have been depressed. So there are other business as usual impacts on the net interest income, which are relevant to the events that happened in the quarter, which we cannot say those are one-offs or whatever. We have just given you one-offs which were where we need to act upon because of maybe some inaccuracies or prior period items, etc. Those have been accounted for. The 4,700 which we say as business as usual, that will change depending on how the current quarter is going, how the next quarter is. So that number, is something is a baseline which from where we are starting. But I appreciate your point that itself is lower because of some of the business, the impacts which happened during the last quarter on our business.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind?
Well, IndiGo has been India's largest airline for a while now, and their latest results, their annual results suggest that the growth of the airline remains extremely positive. They command a market share of 63%. They have a fleet of a whopping 434 aircraft, and that's much less than what they'd like to be, and they're inducting aircraft at a record pace. We've got a wonderful guest with us, the CEO of IndiGo, Peter Elbers. Thanks very much for being with us. It's great to see, IndiGo prosper in the way that you are at this stage. Aviation in India is booming. We've spoken about that in the past. But there's been concern about what we've seen in the last, let's say, 1 month or so after the Pahalgam terror attacks. It is something which hit the aviation sector in terms of bookings and cancellations. Do you believe the situation is now stabilizing?
Well, good evening, and thank you for having me. we've seen actually a very, very strong year last year with a different performance over the different quarters, but overall a very, very strong performance last year and especially last quarter. That performance had continued in the month of April, and the numbers for April were released yesterday by the DGCA. Obviously, the month of May has been impacted by the situation in the north of the country, and with the return now of the opening of all the stations, basically IndiGo has reinstated all its flights. So taking a step back and looking to the overall demand and the market and the opportunities for the market, actually we have seen that the cancellations basically came to a halt and that people start to book again. And with that, we have an optimistic view on the return of travelers pretty soon, actually.
Is there any rough estimate of how many cancellations of flights were taking place, let's say, for the month of May as a result of the tensions?
Yeah, let me put it in perspective. You know, if you see what happened, there were 32 airports closed. IndiGo was operating out of 11 of these 32 airports. So we had 11 airports closed, and we had a total of 170 flights a day closed. IndiGo operates a little short of 2,300 flights on a daily basis. So 170 out of 2,300 were cancelled, and that had a duration of 8 days. So if you take the entire month of May, the cancellations were at 8 days only, and on those 8 days, there was 170 flights out of a total of 2,300. So that puts it into perspective, and you come to a very low single-digit number in terms of flight cancellations as percentage of the overall flights in the entire month.
Mr. Elbers, the other concern, of course, is that flights are now having to get much longer because Pakistani airspace is closed. This is for your international operations, flights to the Middle East, for example. And, given the volatility of the situation between India and Pakistan, and that's something that can continue into the future, how much of a concern is it? And a related question, at what stage will you pass on these costs to passengers? Because obviously it's going to be much more expensive to operate longer flights for you.
Yeah, what we have been doing, and also there, let me put it in perspective. After the Pakistani airspace closure, IndiGo decided to suspend, or actually we had to suspend flights into Tashkent and Almaty because circumflying Pakistan airspace made these flights too long. So out of a total of 131 destinations, 41 international, we needed to suspend 2. Then for the remaining flights, and those flights indeed from the northern part of India into the Middle East, we had a total of 19 routes and a total of 35 flights being affected by longer flying times up to 20 to 30 minutes. So if you look at these numbers, again, putting it in perspective of the total situation, these are actually relatively limited numbers for IndiGo. Of course, we would be better off if the airspace was not closed, and of course, we would be better off if we did not have to deal with that reality. But it's a reality we deal with. And what we are doing now, we're kind of reviewing our network, and we may reallocate some of that capacity more to the southern part. I think there the opportunity for India and IndiGo really is, given the size of the country and the different hubs with their different geographical scopes, we have the opportunity to temporarily, if needed, reallocate some of that capacity to other places.
The A321XLR is an aircraft that IndiGo is really banking on. But again, the entire issue of range, as I understand it, might come into play if airspace over Pakistan is closed. So, for example, if I was looking to fly from Delhi to a destination in Europe, which might well be the case with the aircraft you're acquiring non-stop, would that not be a problem for me if Pakistani airspace is closed?
Yeah. Well, firstly, we get the XLR towards the end of this calendar year. And, that's still far away from where we are today. And a lot can happen in terms of airspace between today and that point in time. So I say that's one. Two, and again here, we have the opportunity to put these planes in different parts of the country as well. And if we fly from Delhi to, for example, Denpasar on Bali, there's no Pakistan airspace on that route. So the opportunity of flying to different geographies, to fly to different parts of the world, to have different routes being operated, we have the opportunity to reallocate some of that aircraft, if needed, still by the time it's December or even early 26, we have the opportunity to fly them on other routes to avoid any of these challenges.
The other concern which has arisen post-Pahalgam is Turkey. You have, a tie-up with Turkish Airlines. You fly some of the most, in fact, the world's most intense 777 operations in terms of the number of seats which they have. And that is, Turkey and Istanbul is a gateway for your passengers to go to many other parts of the world. But there's a certain sentiment over here. We've seen what's happened to the company Celebi, and I know that there is pressure on IndiGo as well. How are you dealing with it? And how do you respond to those who say that, look, IndiGo needs to cut down its operations through Turkey?
Yeah. Well, there's I would say different layers in this discussion. The first layer is the operations between countries when it comes to air travel are being governed by what is called an air service agreement. And the air service agreement defines what is the number of flights and who to operate and so on and so forth. So that is the basic operating principle also for IndiGo. Within that framework of the air service agreement, IndiGo is operating fully compliant with the regulations, the frameworks, the opportunities and the restrictions possibly which such provides. I think certainly that's important. We do have thousands of customers being booked on those flights, either from India to other parts of the world connecting over Istanbul, or from other parts of the world connecting over in Istanbul back to India. And we want to continue to serve those customers. In the overall scheme of things, and you mentioned at the introduction, IndiGo is having over 400 planes. These are 2 aircraft out of the 400. So that puts it a bit in perspective. What is the overall quantity? But our viewpoint is we operate within the guidance of whatever is in the air service agreement, compliant with the government regulations. If they change, we'll adjust accordingly to make sure that we're compliant. And for now, we continue to serve our customers.
So how would you respond to anybody who says or asks whether you are under pressure to curb services through Turkey?
I don't think IndiGo is under pressure to cut services to Turkey. Again, if the government were to change its set of rules, of course we comply with that. But if any pressure, we feel the need to make sure that we fulfill the obligations we have to all the customers who put their trust in us, who made their booking with us, who have their travel plans with us. In the same way as we quickly reinstated all our flights to the northern part of India when they reopened. In the same way, we want to serve our customers which are booked on these flights.
Is there any possibility that IndiGo would consider of a new hub, perhaps outside, if there are problems which continue with Turkey?
Of course, as an airline, we always look for, if circumstances change or if operational elements are changing, we'll adjust accordingly in the same way as we have adjusted our network after the Pakistan airspace closure. In the same way we adjusted our network due to other weather-related events. So we'll always make sure that we look for what fallback opportunities or what fallback positions are there. But until that becomes the case, we continue to operate in the way we operate today.
Now, Mr. Elbers, when we spoke about, I think, 2 or a little bit more years back, that was, I think, our first interview, I kept asking you and repeatedly, are you going to be going international? Are you going to be flying long-haul aircraft? And you gave me a neither here nor there answer. But then you're buying A350s now, and you're acquiring A350s, a fairly large number of those planes coming in. Prior to that, a couple of 787s as well. And of course, you are deploying 777s also. And so let me ask you that same question I asked you a couple of years ago. How do you see yourself competing as a brand known to be a low-cost carrier with, let us say, an Air India, which offers a full-cost service on long-haul routes?
Yeah. Well, let me start by saying I regret that my answer at that time was perceived as a neither here nor there answer when I said to you, IndiGo will become a global aviation giant by 2030. But we're a listed company after all, so when we speak about buying aircraft, we do that according to the rules which apply to that, and we make it public at the time it is appropriate, and then we make it public to everyone. And obviously, what we have been doing since our first interview, and thank you for making that point in reference. You know, I joined IndiGo in the summer of 22, and the country was emerging from COVID, and it was clear that India was on a continued track towards becoming the third largest economy in the world. Part of that is having an airline or even airlines which are representing that size and opportunity and potential of the country. And against that backdrop, the ambition for IndiGo to become a global aviation giant by 2030 was shaped and further formed. We have put two very significant steps on that. One was an additional order for 500 narrow bodies in 23, and the order for 350s, which we made in 24. And clearly, these two very important building blocks will help us to reach that goal. I think IndiGo cannot be labeled as a classical low-cost airline. We operate on a low-cost basis, and that's needed in order to be competitive in the market. We want to maintain our cost leadership. But for the flights we operate now, the 787s, which we have on damp lease until the 350 arrives, actually the announcements today and the open for sale from Mumbai to Manchester and Mumbai to Amsterdam will have a service, including in the economy class, with hot food for the duration of these longer flights, 8 to 9 hour flights. So IndiGo has taken already many steps, including the domestic business class, a loyalty program, partnerships, which help us in our building blocks of that journey towards becoming a global aviation giant. I hope this is a bit more clear than the neither here nor there answer 3 years ago.
I'm going to push you. I'm going to push you now. How good is your business class going to be? Is it going to offer the premium service which we see leading international carriers offer, or is it going to be some sort of a hybrid model?
No, you have to walk before you can run, and I think IndiGo is entering this space. We have put a new benchmark, I would say, in the domestic space with IndiGo Stretch, where our customers have an extremely positive response to IndiGo Stretch. We started now with that very same product international into Bangkok, and we use the same product on our Amsterdam and Manchester routes, which will be actually the same way how IndiGo started domestically, very affordable fares for a premium service. So yes, these are not yet flat beds or some of the features some of the others are having, but the price will be done accordingly, and this will open up a whole new foray of customers and travelers who wanted to have more space, who wanted to travel in that part. It will have hot meals, which I think is an important element for that duration of the flights, and will change the landscape in that. And by the time it is 2030, we'll make the next step in terms of our evolution.
Oh, that's an interesting point. So to start with, you might have a version of the stretch seats, or possibly the stretch seats which you presently operate, but by 2030 you will reassess and possibly go in for full lie-flat beds in business class. Am I reading that right?
Well, we have the 350s coming in by 27. We have not yet disclosed what's the exact configuration for the 350 will be. And until the 350s are there, we have the bridging solution with the 787s. That bridging solution is the 787s we take on damp lease from Norse, and having actually a very good seat, but not a flat seat, a very good seat. And for IndiGo to enter that space with 56 of these stretch seats, which are a good business class seat, in-flight entertainment, hot meal, Indian curated meals, Indian curated liquor, and that actually will help us to start finding our place in that market. Whatever comes after that, I guess we will have a similar interview in 2 years from now, and I'll be able to share that with you.
All right. A few more questions. One of the big concerns, and I was tracking this personally a few months back, were these hoax bomb calls which were made. It affected the industry tremendously. Fortunately, these were hoax calls at one level. I mean, that was the silver lining. But it must have been very tense for you and difficult for you to be getting woken up potentially in the middle of the night to be told that there is a situation which is developing. Nobody at that stage initially really knew what it was all about. Could you run through how you dealt with this problem?
Yeah, it is. Let me be a bit outspoken on that. I think whoever was behind this was a very irresponsible action. Safety in aviation industry is of paramount importance. So as airlines, we have to take these calls very serious. And this was not specifically for IndiGo, this was for the entire Indian aviation. But being the market leader, obviously, we had a very significant number. And the numbers went up to high levels. But I think here, the collaboration with the Indian government and the collaboration with the entire ecosystem to address this issue has been very important. And again, as airlines, we have to take these calls and these elements extremely serious. And therefore, I'm glad with the strong collaboration and cooperation we had within the aviation group with the airlines, airports, and obviously the Indian government.
Are you satisfied with the progress which has been made in investigations to trying to figure out where this all came from, how this all happened? Who was responsible?
I think I would better leave that to the Indian government, and they're leading this type of investigation, and it's for them also to communicate on that, and not up to me.
Mr. Elbers, earlier on, and this was quite a few years back, you've had lots of problems with aircraft operating, the Pratt engines, the Pratt & Whitney engines. Of course, since then, you've ordered hundreds of aircraft with new generation engines and a different engine manufacturer. But in terms of dealing with the number of aircraft with those Pratt engines which are still grounded, where does IndiGo now stand?
Yeah, it's important. It was an important topic for us last year. It is still an important topic, but if I may use that phrasing, we've turned the corner. And IndiGo was largely affected by these global aviation, supply chain shortages. It was also being affected by some of the powder metal issues which occurred on the engines of Pratt, and that led to a situation in the second quarter of last year with planes on the ground in the range of 80, which is a very significant number. IndiGo, I must say, and we're very proud of that, had been able to take a whole range of mitigating measures. And thanks to that, we have been able to keep our capacity guidance and present the numbers. I mean, we presented the 7,200 crore profit of last year, which is a very good number. So we have been able to deal with that. Having said that, we turned the corner. The numbers have come down slowly but steadily. The end of third quarter, they were in the 60s. The end of the fourth quarter, they were in the 50s. And today they're in the 40s. So we see a gradual reduction of that number of planes on the ground. And we continue to have a strong communication and collaboration with the suppliers to make sure that we continue that trajectory of planes getting back in the air or being returned to the leasing companies.
One or two more questions, Mr. Elbers. And this is something which doesn't necessarily impact just Indian travelers or airlines out of India. It is a worldwide problem. Boisterous passengers who don't listen, passengers who may be inebriated, who aren't behaving well. And as an airline like IndiGo expands more and more, then that might become even more of a factor. Is this a concern for you, the conduct of passengers on board airlines as India's aviation grows?
No, I think concern is probably a bit of a strong word. Is it a point of attention? Absolutely. And even in India, we have seen over the past 2-3 years a couple of occasions where things were not going the way they should go. I think I've mentioned in an earlier interview to our customers, please treat our crew the way you want to be treated. I think that's a very important thing. But importantly, we keep learning from these occasions and unfortunate events, and we incorporate it very strongly in the training of our frontline staff and very importantly our crew. So it's strongly embedded in our training. Our crews is very well trained and equipped to deal with situations like that, and with that, it is not a concern, but it's a point of continuous attention for us.
All right, and a final question to you. IndiGo is growing at a phenomenal rate. In the history of civil aviation, I'm not sure anybody has grown in quite the same way, certainly in terms of the induction of new aircraft, new routes, etc., etc. With that comes an entirely new generation of young pilots, of ground crew, of in-flight crew, and training has to be designed obviously around the premise of safety. That comes first, obviously. As you grow, how is safety and the training of young crew, whichever part of the airline they are in, possibly your number one focus?
Yeah. Well, thank you for addressing that also. That's obviously for every airline, and so it is for IndiGo, a key priority in that. And we're doing a lot of these trainings in-house actually. So we have a training center right from the start of IndiGo 18 years ago. That's where we do a lot of training. We collaborate deeply with other partners in the industry. Obviously with Airbus, we have a deep collaboration, being our sort of sole plane provider, and we continue to work closely with the government. Aviation safety is a process of continuous learning and continuous evolution and development. And our size also gives us the opportunity to have a lot of those learnings in terms of evaluating experiences, see how we can do better, see where we can learn from, share it with others, and take also information from others. So it's an important topic, obviously, and we continue to have it deeply embedded in all our training, all our procedures, and all the steps we're taking along the way.
Mr. Elbers, as always, wonderful speaking to you. Thank you so much for spending some time and really sort of charting out where IndiGo stands on several of the current issues. Your fundamentals are really something else. Your cash reserves are very strong, and all of the dangers or the threats or the immediate uncertainties, it's stuff that you can probably deal with. But it's exciting times for Indian aviation, and let's hope that this curve continues. Thank you very much for speaking to us.
Thank you so much. Have a wonderful evening.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
N. Jaykumar, MTN Group CEO at Prime Securities, joins us as well to discuss what's in store from here on. Jaykumar, good morning and welcome to NDTV Profit. This is Hiral on this side. With the kind of uptick that you're seeing in terms of markets, and you had FIs which actually came out and had a big sell number in terms of yesterday's session, what is the feeler that you're getting from here on? Is it going to be a DII driven market? And if the FIs are exiting and booking profits, what would this mean?
I think a one-day sale figure can hardly be classified as a trend. And I personally don't think that a single-day sale figure is enough to conclude that the FIs are selling and booking profits. I think there have been sellers in the past, but over the last couple of weeks, I think there's been a decided shift with the dollar index coming off and the money moving out from the US markets, I definitely see an increasing trend of money coming through. There could be odd days when the FIs are sellers, much the same way the DIs could be sellers on a few days. But I think the trend that every dip will be bought into is something that I buy as of now.
I agree with that point, Tamanna here, and great to speak with you again. I'm just wondering if bond yields inching upwards is something which can be a bit of a pain point from an emerging markets perspective at all. And in terms of global turmoil and turbulence on the trade war front, do you think that ship has now sailed, or could this as a factor come back and bite us?
With Trump, nothing has ever sailed. I think these things have a habit of popping up, and especially when you have a social media-driven policy formation process, where everything is announced on Twitter and then we wait for clarifications later, or for that matter, everything is done through executive orders with hardly any referral to Congress. I think it's a new world and it's a new way of doing things. But the way I see this is that at least as far as the trust factor in the US markets, or the US government more importantly, is concerned, that's certainly something that is a big overhang. I think people have started losing faith, and money flows have in a sense presaged that and preambled that. And the money coming out of the US markets, coming out of the bonds, equity markets are holding up despite the fact that there will be earnings downgrades as inflation catches up. We've not had a single full quarter with the tariffs in place. And the tariffs are inflationary at the very least. I mean, 30% China may be a sort of a cotton wool kind of deal. But the reality is that at 30%, it's still a lot of pain point and pressure on the average US consumer. I believe that the Indian trade deal will get done over the next few weeks. We aren't used to these knee-jerk kind of have a cup of coffee in Switzerland and do a deal kind of process, which China seems to have taken up more, I would say, almost as if needing a deal to be done. I think the US needed it probably even more. But now that China has been set, and I think there'll be a reasonably fair deal done, I believe, with India. Keeping that in mind, but also the backdrop being that Trump's whimsicalities are legendary now, we will have uncertainties going along the way. But the reality is that the US consumer is now going to be hit and slammed down to the whole bunch of cost escalation, which is already happening. The likes of Walmart and Home Depot, etc., have already talked about it. My own sense is that that will be the pressure point that will make them relent. The downgrade in the US bond, the treasuries, is a matter of severe concern for them, as $36 to $37 trillion of debt is the outstanding, and interest rates are moving up. The long bond, the 30-year has gone or inching close to 5%. The 10-year has gone past 4.5% and kind of straddles that area. And these are levels that have not been seen, especially in what is seen as a recessionary and almost stagnation kind of environment domestically. So the US consumer is hurt. The US manufacturer has never made money. In fact, people have been moving out of the country to set up manufacturing facilities. So I'm not even sure what the current administration is in the US is smoking. I mean, these are completely alien to conventional thinking, and certainly makes no sense whatsoever. But be that as it may, we are in this maverick-led world, if you will, and certainly as far as the US is concerned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
After receiving reports of investigations carried out by an external professional firm and the Internal Audit Department, the Board of IndusInd Bank Limited says that they suspect the occurrence of fraud against the lender. Meanwhile, the bank reports a net loss of 2,328.9 crores. Chairman Sunil Mehta in the Q4 earnings call acknowledges the recent governance issues that have rocked the bank, adding that it is working with management and external advisors to plug system lapses and tighten internal controls. The Nifty and Sensex stage a smart rebound on course to snap a 3-day losing streak as auto, IT and pharma stocks led the recovery. Broader markets also ended higher, though they underperformed the frontline indices in the second half of the session. As per government sources, India is targeting a complete exemption from 26% additional tariff in the mini trade deal with the US. India aims to conclude the mini trade deal before July 9 to avoid reciprocal tariffs. Trade Minister Piyush Goyal is most likely to meet the Trump administration again. The Central Consumer Protection Authority issues a notice to Uber questioning its practice of prompting users to pay a tip in advance in exchange for quicker service. Union Minister of Consumer Affairs Prahlad Joshi calls the practice unethical and exploitative, raising questions over its fairness to consumers. The Maharashtra government is working on a policy to tackle traffic congestion associated with car parking in Mumbai and is likely to make proof of a parking space mandatory for new vehicle registrations. And the Met Department issues an orange alert for Karnataka and a red alert for multiple regions, including coasts of India. Warnings of heavy to extremely heavy rainfall is issued over the next 2 days. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. And it's our top focus this evening. IndusInd Bank has reported a larger than expected net loss of 2,329 crore for the January-March quarter. A stark contrast to the 2,349 crore net profit that it posted a year ago. Now, the downturn is largely attributed to accounting discrepancies, which the bank disclosed as it grapples with ongoing financial scrutiny. IndusInd Bank also disclosed a suspected case of internal fraud involving its microfinance operations, with 172.58 crore wrongly recorded as fee income across 3 quarters in the financial year 24 to 25. Now, this irregularity came to light following investigations by an external professional firm and the bank's internal audit department. The IAD on May the 20th, that's yesterday, submitted its report, which determines a cumulative amount of 172.58 crores was incorrectly recorded as fee income in the microfinance business over 3 quarters that ended December 31st on 2024.
Now, on any given day, a 2,400 crore loss for a bank like IndusInd Bank, which is, by the way, the largest it has ever reported in its 30-year history, would be the news of the day. But today, of course, at IndusInd Bank, that was not to be. A lot of the disclosures that came alongside the results then took center stage at the bank. The bank said that what it believes is that there has been a fraud, or it suspects that there has been a fraud that has been committed against the bank, and that it is reaching out to appropriate authorities to conduct an investigation. This is the first time the bank has reported, has come out and used the word fraud in any of its disclosures. What started as of 10th of March as an accounting discrepancy in the derivatives portfolio has now, of course, grown multifold. You've had issues with the derivatives accounting, of course, about a 2,000 crore hit to the balance sheet. You've got a microfinance accounting problem. At first, the bank said that 674 crore worth of incorrect interest income income was recorded. Today, of course, the bank is saying that 173 crore of incorrect fee income has also been recorded in these accounts, and that is obviously multiplying the problem. On top of that, there were issues with the other assets and other liabilities accounts of the bank where unsubstantiated balances were found. The bank, as part of its entire review process, has also found other accounting discrepancies, very small ones, but significant, of course, in the overall context of things. Now, going ahead, what the bank believes is that they have disclosed everything that needed to be disclosed. The bank says that they're starting FY26 on a clean slate. The bank's chairman, Sunil Mehta, spoke to analysts a little earlier over a conference call where he said that the bank is also in the process of finding a new CEO. They are required to send out names to the Reserve Bank of India before 30th of June, after which the Reserve Bank of India will finalize who exactly will take over as the CEO of the bank. But of course, the key component of the story is a fraud or a suspected fraud, at least with the accountants, with the statutory auditors of the bank coming out and saying that they feel that senior management at the bank, as well as former key management personnel, which actually includes Sumant Katpalia, the former CEO of the bank, and Arun Khurana, the former deputy CEO of the bank. They were all involved in concealment of material facts, and therefore they are also proceeding with certain investigations and certain complaints to the appropriate authorities. We'll still need to wait and see how exactly all of this pans out. Of course, a new CEO will be the key trigger for IndusInd Bank, but analysts believe that the bank's growth story will have to be stalled at least for a year or so.
Thanks so much for that, Vishwanath. We'll continue tracking all of the developments within IndusInd Bank. Let's remember all of these details coming in as the company also posted its earnings today. And let's take a look at how the markets fared today. Benchmark indices held their ground despite global uncertainties. Indices closed in the green with Sensex up 410 points and Nifty up by 129 points. All sectors except for consumer durables ended in the green, with pharma and realty leading the pack. Nifty and Sensex also saw a rebound from a 3-day slump. My colleague Harsh now joining with a detailed market roundup of the day.
Well, a decent day of trade, frankly. After what's been a couple of tough days of trade, we saw a 100-point increase on the Nifty 50. We've closed above 24,800 today, which is the key positive. When you're looking at stocks within the Nifty, and if you look at the larger breadth, even within the Nifty 50 pack, it was skewed in favor of the advances, which is again a positive. BEL and defense again came to the rescue. BEL up another 5% in trade today. That was the one big mover. Outside of that, financials, auto, there was some support from those pockets of the market as well. The top loser was IndusInd Bank, whose numbers likely determine, and we'll have to wait and watch as to what the reaction to that will come in tomorrow in trade. So maybe eye out on that one as well. When you're looking at the overall market breadth, 1400 advances to just about 800 declines. So that's how it played out, at least in trade today, and therefore indicates that the Nifty mid cap and small cap were not too far away from how the Nifty 50 played out. In fact, the Nifty mid cap was up around 0.8% and the Nifty small cap up around 0.4%. So that's how those two played out. In terms of certain sectors which did well, defense I did mention. In fact, the Nifty defense was up another 3.5% in trade today. So we saw good traction in the entire pocket of defense. But outside of that, all the sectors closed in the green. The realty was one of the big outperformers in trade, up nearly 2% as well. What didn't do well was just the consumer durables index, which was down a wee bit. But outside of that, we saw good traction across sectors. Last off, I want to cover some stocks which were in focus on the back of numbers. Tata Tele, for example, was up 20%. HLE Glasscoat, despite numbers coming 2 days ago, was again up 6%. So you saw some sharp moves on some of those, and a Trident also saw a good move in trade today, immediately post the numbers. On the other hand, there were some which didn't do as well on the back of numbers. At Dixon Tech, despite a strong set, was down roughly 6% or thereabouts. Yeah, that's how it played out.
And despite global trade tensions and economic uncertainties, Moody's has reaffirmed India's strong economic position, citing robust domestic growth and a vast internal market as key stabilizing factors. The agency notes that India's limited reliance on exports and government-led initiatives, including private consumption boosts, manufacturing expansion and infrastructure investments, help shield the economy from external shocks. Now let's listen in to Nikki Dang, SVP, Moody's Ratings, on India's stance amid these uncertainties.
I think that's definitely upside for India's growth, and especially for planting India's economy more into the global supply chain, right? So we saw early May, India and UK secured the free trade agreement, and the trade deal really suggests the trade liberalization is becoming a pillar to the broader policy response to the U.S. Tariff shocks in here. And this is in contrast to India's historical moves where more protectionist the trade policy is in place. And, with the continued negotiation with, EU and the US, latest news has, Commerce Minister just finished the 4-day of a trip visit to the White House, and with a now 3-phase timeline with an initial pact signed with the US expected before July, and the comprehensive agreement concluded by the next year. So this is all going in favor of plugging India more so in the global supply chain. And this is a kind of in conjunction with government's manufacturing push, which has stalled, in recent years, where you see manufacturing contribution to GDP kind of is half of where the government would like to see, like 25%, but we're staying at 13%. At the same time, employment for industrial employment only accounts for a quarter of the total employment compared to a high 40% for agriculture. So I think this is definitely in India's favor.
And on to an NDTV Profit exclusive. The Reserve Bank of India's internal committee is expected to finalize the surplus transfer amount to the government on Thursday. Reports suggest the RBI may announce a record dividend, with estimates ranging from 2.5 lakh crore to 4 lakh crore following its 100 billion liquidity infusion since December. What could this mean for fiscal policy and market liquidity? Vishwanath Nair joins us now with exclusive insights.
What we understand from our sources at this point in time is that there's an internal review that has been going on at the Reserve Bank of India about the economic capital framework. Remember that this is the framework that determines what is the level of provisioning that the RBI has to do, and thereby determine what exactly is the surplus that it will transfer to the government. Since 2019, the contingency risk buffer, or that provision that the RBI does, is set between 5.5% to 6.5% of the size of the balance sheet. In FY24, the RBI went with a 6.5%. It's the upper end of that provision requirement. They have maintained that. Now, the internal committee is actually divided on what exactly the future course should be. One part of the committee believes that the framework has stood the test of time, so don't need to make any amendments at all. While the other believes that there are now global concerns that are emerging. One is geopolitical tensions in different parts of the world. And second, there are trade disruptions that are happening because of the US's stance on global trade at this point in time. And therefore, the Reserve Bank of India might want to actually go out and raise that contingency risk buffer in the way that is there at this point in time. So we need to see what exactly goes on at this meeting, and what the RBI finally goes ahead with. The government needs to approve this before anything actually happens.
And in a significant update on the India-US trade pact, government sources have revealed that India is targeting a complete exemption from 26% additional tariff in a mini trade deal with the US. My colleague Rishabh Bhatnagar, who's been tracking the story very closely, now joins us live. Rishabh, we're also additionally seeing that Trade Minister Piyush Goyal is likely to meet top officials from the Trump administration again in an effort to finally lock down a mutually beneficial trade deal.
Right, Sanjana, what we're hearing from top sources within the Commerce Ministry is the fact that India is aiming for a complete exemption of these reciprocal tariffs that were imposed by the Trump administration. So what we can expect is an interim trade deal or a mini trade deal before the pause period for these reciprocal tariff ends, which is July 8th or July 9th. That is one. Then the first tranche or the second part of this deal is expected by October 2025. That was always the deadline, the fall deadline. And then a third, the entirety of this trade agreement, the entire bilateral trade agreement, the BTA, that timeline has not been clarified yet. So a three-part deal becoming very, very imminent now. More important stuff that we heard today was the fact that, as you rightly said, Commerce Minister Piyush Goyal is expected to meet these significant personalities of the Trump administration again, the two being the US Trade Representative as well as the US Commerce Secretary. Also, a couple of interesting things that we picked up today pertaining to the BTA between India and the US is the fact that India might actually be opening up its agri and dairy market, though in a very, very limited way, let's say in a very measured way, with minimum import prices as well as quotas being there in place. That is something that we will track very closely. Also, what India is aiming for is a reduction in the basic customs duty for labor-intensive goods such as leather. So those are two facets that are new, and we will continue to get more details on those.
Right, Rishabh Bhatnagar, thank you so much for those updates. We'll continue tracking the latest with regards to these BTA talks and bring you all of the developments. Moving on, the Met Department has issued an orange warning for Karnataka and a red alert for multiple regions within the state, including the northern interior, southern interior and coastal Karnataka, forecasting heavy to extremely heavy rainfall over the next 2 days. Goa, Maharashtra and the Konkan region are also likely to witness very heavy to extremely heavy rainfall between May 20th and 22nd, while Mumbai is expected to receive moderate to heavy showers from May 21st. Now, the IMD's alert comes even as Bengaluru struggles with the aftermath of a downpour that flooded homes, submerged vehicles and left parts of the city in disarray. And now let me quickly go over to my guest joining me this evening, Dr. Akil Srivastav, scientist at the IMD. Thank you so much and good evening. Thank you for your time. I'm going to jump right into it. How severe is this upcoming weather pattern compared to previous monsoon seasons?
See, the weather which we are seeing at present over Karnataka, where we are seeing extremely heavy rainfall activity, it is not at present associated with the monsoonal systems actually, because monsoon onset has not yet happened over Kerala. So this system, whatever rainfall we are receiving in Karnataka at present, it is because of cyclonic circulation which was seen over South Interior Karnataka yesterday, and today there is a trough over this particular region, which is causing a lot of moisture incursion over the region, and extremely heavy rainfall has been reported. Yesterday also, that is if you talk about 24 hours, today morning, around 29 centimeter rainfall was reported in Udupi district, and in district Uttar Kannada also around 19 centimeter rainfall has been reported. When we say extremely heavy, it is about 20 centimeter of rainfall. Other than that, there were different districts where very heavy rainfall was also reported.
So are we then seeing signs of climate change influencing monsoons and extreme rainfall patterns in India, would you say?
See, these are not exactly, cannot directly relate to climate change, because these are the features which we are already seeing in previous years as well. So this is with respect to some synoptic conditions which are causing a lot of moisture incursion. And anyways, Western Ghats are known to receive good amount of rainfall activity. So this is not exactly we can directly relate to climate change, but yes, this cyclonic circulation which formed was the major reason which caused such kind of intense rainfall activity over Karnataka, and not even Karnataka, I should say entire West Coast.
Okay, and how will this extreme weather impact supply chains, especially in sectors if we're looking at agriculture, manufacturing and retail, and if there were to be any advice given to these particular sectors with regards to the upcoming climate?
Yes, I mean, whenever we have got such kind of extreme rainfall activity, it does impact a lot of, these kind of supply chain things where the traffic, travel, everything gets disrupted. However, we are issuing the red warnings accordingly from past few days for this particular event, and which was, rightly mentioned in all our bulletins. And I think adequate precautions and measures have been taken to, ensure that minimum effect is seen on the people's life.
Dr. Akhil Srivastav of the IMD, thank you so much for joining me this evening. We'll continue tracking your bulletins very, very closely and bring you the latest updates. Moving on, the centre has issued a notice to Uber India calling its advanced tip feature an unfair trade practice that undermines consumer rights. Acting on user complaints, the Central Consumer Protection Authority, also known as the CCPA, has asked the ride-hailing platform to explain why customers are being nudged to tip drivers before a ride begins. Now, Consumer Affairs Minister Prahlad Joshi criticized the practice on X, stating that forcing or encouraging users to pay tips in advance for faster service is unethical and exploitative. He emphasized that tipping should be a voluntary gesture of appreciation after service and not a precondition. Now, Uber's advanced tip prompt appears during the booking process, encouraging users to pre-select a gratuity amount that's